Let's talk about the economy, something that affects all of us every single day, whether we realize it or not. Think of the economy as a giant engine, humming away in the background, with retail sales as one of its most important dials, constantly moving, always telling us something. Retail sales measure all the stuff we buy from shops: coffee, trainers, groceries, TVs, even petrol. It's everything from your morning croissant to a new pair of shoes, or a tank of fuel for your car. Economists add it all up to see how much we're spending, like taking the nation's shopping pulse. It's a way to check the heartbeat of everyday life. If retail sales go up, it means people feel confident and are willing to spend. It's a sign that wallets are open and spirits are high. When you're feeling secure, you might treat yourself. Maybe you buy that extra pastry or splurge on a new jacket. But when you're worried about the future, you hold back. You might skip the treat or put something back on the shelf. Retail sales figures are a giant version of that feeling, showing the collective mood of millions. It's like a national mood ring, changing color with our confidence. That's why they matter. They're a real-time indicator of economic health, giving us clues about what's happening right now. If people spend, shops are busy, factories get orders, and more jobs are created. The whole system gets a boost, from shop floors to office desks. But if spending drops, the whole chain reverses. Shops get quiet, orders shrink, jobs are at risk, and uncertainty grows. So, when retail sales figures come out, everyone pays attention. From government officials making big decisions to local shop owners planning for the week ahead. It's the first sign of which way the economic wind is blowing, hinting at what might be around the corner. Retail sales aren't just numbers, they're a snapshot of national confidence, a reflection of how we're all feeling about the future. They help predict what's coming next for the economy, guiding decisions for businesses, investors, and policymakers alike. If the numbers are strong, optimism spreads. People feel good, and that energy ripples through communities. If they're weak, it's a warning light for everyone, a signal to be cautious, to watch what happens next. That's why retail sales are watched so closely, not just by experts, but by anyone who cares about what's ahead. They're not just about shopping, they're about the future, about hopes, plans, and possibilities for everyone. So next time you buy something, remember, you're part of the economic engine, helping to keep it running strong. And that engine runs on confidence. Yours, mine, and everyone's together. Now, the main event. Germany's latest retail sales figures have just been released, and they've taken everyone by surprise. The numbers are in, and they're not what anyone expected. Most experts were betting on a small rise in October, predicting a modest 0.2% increase as shoppers geared up for the holiday season. But instead of growth, sales actually dropped by 0.3%. That's a swing in the opposite direction. It might sound like a small change, but in the world of economics, even a fraction of a percent can signal a major shift. It's like expecting a gentle turn and suddenly slamming on the brakes, jolting everyone who was watching. The direction was completely wrong. A surprise that sent ripples through financial markets and left investors scrambling to adjust. Everyone had assumed German shoppers would open their wallets more as the festive season approached. Instead, they tightened their belts. The data flashed a warning light. German consumers spent less in October than they did in September, raising fresh concerns. And because Germany is Europe's economic powerhouse, when its shoppers get nervous, the whole continent sits up and pays attention. This wasn't just a small miss. It was a clear reversal of expectations, a signal that things might be changing. Overnight, the mood shifted from optimism to caution, with uncertainty now hanging in the air. Retailers, analysts, and policymakers all took notice, realizing this could be a sign of deeper issues. The drop suggests that German consumers are feeling more anxious about the future and are starting to hold back on spending. It's a clear sign that confidence is fragile and could easily be shaken further if things don't improve soon. When Germany's shopping engine sputters, the effects ripple out, and everyone, businesses, workers, and even neighboring countries, feels it. The October figures were a wake-up call for the entire region, not just for Germany. Now, everyone's asking, was this just a temporary blip, or is it the start of a bigger trend that could shape the months ahead? The answer matters for all of Europe, and the world will be watching closely to see what happens next. So, how did the experts miss the mark? Predicting the economy is tricky. Models look at jobs, wages, and confidence, but can't capture the human mood. People aren't robots. Headlines about energy prices or job cuts can make everyone cautious, even if their own situation hasn't changed. Sometimes, spending shifts to things not counted in retail sales, like holidays or streaming services. Retail data measures goods, not experiences, and that's where more money is going these days. Economic data always looks backward, not at what's happening right now. By the time the numbers are out, the mood may have already shifted. The experts made their best guess, but missed a subtle change in behavior. Shoppers decided to save, not spend. It's a reminder, numbers can't always predict how people feel. The October surprise was all about confidence, not just cash. And that's what makes the economy so unpredictable. What does a drop in retail sales mean for families? It's about small, everyday choices. Imagine the Schmidts at their kitchen table, noticing higher bills and pricier groceries. They start holding back, postponing new shoes, skipping the latest phone, window shopping instead of buying. Every purchase is weighed need or want. They hunt for bargains, switch to cheaper brands, and make packed lunches. It's not always about having less money, but about feeling uncertain. This caution spreads. Friends and neighbors talk about cutting back, and it becomes the new normal. The joy of impulse buys fades, replaced by the satisfaction of saving. Millions of these quiet choices add up. Economists see it in the data, but it starts at kitchen tables and supermarket aisles. It's not policy, it's people reacting to uncertainty. And that's what drives the numbers. Let's meet Klaus, who owns a bakery near Munich. Every morning, he rises before dawn, kneading dough and preparing his shop for the day ahead. For decades, he's been part of the community, serving fresh bread and pastries. Locals know his shop as a warm, welcoming place, where the smell of baking fills the air, and neighbors gather for a chat. But lately, he's noticed fewer customers in the afternoons. The once busy hours now pass quietly, with only a handful of regulars stopping by. The little luxuries, cakes and treats, are the first things people cut when money feels tight. Even loyal customers hesitate before buying that extra pastry. Now, Klaus is left with unsold pastries at the end of the day, packing them away and wondering what tomorrow will bring. His costs, flour, butter, electricity, keep rising, but his income shrinks. Every month the bills seem a little higher, and the profits a little smaller. He worries about his staff and whether he'll need to cut hours. The thought of letting someone go weighs heavily on him. That 0.3% drop in retail sales isn't just a number for Klaus. It's empty trays and a quiet till. Each day, the impact feels more real. The uncertainty from shoppers becomes his own uncertainty. He wonders how long he can keep going like this. Should he invest in new equipment or hold off? Every purchase now feels like a risk. Should he bake as many cakes or scale back? Guessing wrong could mean more waste or disappointed customers. Every decision is harder when confidence is low. The pressure builds with each choice he makes. Klaus's story is repeated in small businesses everywhere. Across Germany, shop owners face the same tough questions. The data is real life for people like him. Behind every statistic is a person, a family, a dream. When shoppers hesitate, local shops feel it first. The ripple effect spreads through the whole community, and that's how a national trend becomes personal. For Klaus, it's not just about numbers, it's about his future. For Klaus, the numbers are his livelihood, and every day, he hopes for better times ahead. The impact doesn't stop at the bakery. When shoppers hold back, department stores see unsold stock pile up. They cancel orders with wholesalers, who then cut orders to factories. The factory owner, facing fewer orders, reduces production. Workers get their hours cut, or worse, lose jobs. The cycle continues. A worker with less income spends less, cutting back on small luxuries. The ripple effect travels through the whole economy. What starts as a cautious shopper becomes a chain reaction, affecting shops, suppliers, and factories. Each link in the chain feels the slowdown. A small dip in spending can snowball into a bigger problem. It's not just about numbers, it's about livelihoods. The slowdown moves from the high street to the factory floor. And it all starts with a single decision to save, not spend. That's how the economy catches a cold, and why everyone watches retail sales so closely. Why does a German slowdown matter so much? Germany is Europe's economic engine. When it runs smoothly, the whole continent benefits. But a drop in retail sales is like hearing a strange noise from that engine. Is it just a blip, or a sign of deeper trouble? 1 week, month could be nothing. Maybe shoppers are saving for Christmas. But if the trend continues, it signals real worry. When everyone saves at once, the economy slows down. It's a paradox. What's smart for one person can hurt everyone if done together. That's why this data is so important. It's a barometer for Europe's health. If sales bounce back, it's relief all around. If not, the engine could be losing power. The stakes are high, not just for Germany, but for all of Europe. The next few months will tell us if it's a sputter or a stall. There's a saying, when Germany sneezes, Europe catches a cold. A slowdown in Germany ripples across the continent. That unsold coat in Berlin? Its fabric might be from Italy, buttons from Spain, shipped by a Polish company. When German shoppers cut back, factories and farms in other countries feel it. Eastern European factories, Dutch farmers, French vineyards, all depend on German demand. A cautious German shopper means fewer exports, slower growth, and potential job losses abroad. Finance ministers across Europe watch Germany's data closely. If Germany slows, the European Central Bank may have to act, even if other countries are doing fine. Germany's economy is Europe's business. Every decision in a German shop can affect a farmer or factory worker hundreds of miles away. That's why these numbers matter far beyond Germany's borders. The health of one economy shapes the fate of many. When Germany sneezes, everyone feels it. So, what's next? All eyes are on Christmas, the biggest shopping season of the year. Retailers are nervous. Do they stock up for a festive rush or play it safe? The October drop makes it a high-stakes guessing game. The next set of data, covering Black Friday and Christmas, will be crucial. If sales rebound, October was just a blip. If not, it signals a new, cautious reality. Weak sales mean a tough start to the new year for jobs and investment. For now, the fate of the economy rests in shoppers' hands. The next few weeks will set the tone for 2026. No pressure, Germany. Everyone's watching your shopping baskets.